What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is evidence that margin calls could potentially be coming in the near future. And if not in the near future, they will be coming eventually. In my opinion, this short squeeze with AMC going on right now is inevitable. There's not really anything that the hedge funds that are short on AMC can do to really get out of this situation. Now, in addition to this, we are also going to go over what I think the actual plan of these shorts on AMC are going to be trying to do over the next week and into the finalization of the trading week coming up next week, and exactly what those reasons are. And in addition, we also have some very interesting information coming out about the discrepancy between the price on the exchange that we are seeing here and the dark pool price in the dark pool. So we're going to go over this situation in full. In that situation in particular, it's not necessarily what you think. I've been able to gather some pretty interesting evidence about that situation, so make sure you guys stick around. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So at the current time that I'm recording, which is about 2 p.m. Eastern time today, AMC is trading at about 43.85. It's kind of flickering back and forth. Well, in the morning, we did see a pretty strong rally up when the market opened. We did get above 50, almost to 52, and then we had a very significant sell-off to below 40. Now, this is a very important price point, especially going into next week. When we pull up the option chain, this is going to be the June 18th, 2021 expiration date, and we look at this $40 strike, there are still 118,000 contracts that are in the money at the current time. The hedge funds who are short AMC and the different institutions that have sold these options on AMC do not want these contracts expiring in the money. Now, the open interest at one time was in the 225,000 contract range. So a lot of individuals, when AMC was trading maybe in the $70 range, started exercising those contracts, selling the contracts to buy more shares, or selling the contracts to do what is called rolling over to buy more contracts at a further out expiration with a further out strike price. So the moral of the story is, I do think that over the next week, going into Friday and the trading week next week, there is going to be an absolutely crazy battle for this $40 price point. Now, I also want to touch on something very briefly that I am going to say in almost every video going forward. If you guys are using Ortex, this is something you need to keep in mind. So yesterday, we got the new exchange reported short interest data, and the short percentage of the actual free flow, as we can see here, came out to about 20%. And Ortex came out with a statement that said over the last couple of weeks, the reason why we were seeing a spike in the return shares is that we can see that there's a discrepancy between the shares on loan, the percentage of free flow on loan, and the estimated, that's the key word, short interest as a percentage of the free flow, meaning that a lot of these shares that have been loaned out to institutions to short AMC were not actually sold, so they never created that short position. So all they are doing is paying that cost to borrow and then returning the shares in bulk to make it look like they are covering their position. Now, let's get into this margin call situation. So this is going to be taken from ICC 007. Now, this was recently approved back in the middle, towards the end of May, but we are now starting to see the effects of this actual rule being put into place. And there's a lot of other rule changes that I want to go over as well. And every single one of them shows us that the institutions and the regulatory institutions know exactly what is going on with this AMC situation. Now let's read a brief excerpt of this. So as described above, ICC's proposed changes to its collateral assets risk framework in Appendix 6 would refine and update certain risk measures and risk factors for determining collateral asset haircuts that can be accepted from an ICC clearing participant. The proposed changes would also require the risk department to review and update haircut values at least monthly or more frequently as it deems necessary, and to incrementally update such haircuts during periods of extreme market stress. Now, we're going to go over exactly what this means, but make sure you guys stick with me on this because this is very important. The commission believes that these updated collateral asset risk management procedures should allow ICC to continue to mitigate collateral price and liquidation risk through setting acceptable haircuts and providing governance guidelines for monitoring haircut values and managing any deviations or related issues, thereby continuing to maintain a sound risk management framework in this regard. What this is essentially saying is it's giving all of the ICC participants the ability, and the members of the ICC, it gives them the ability to actually manage and change their margin requirements on the people who they are working with, their clients, at any given time. Now, let's see what this means in an even simpler form. So, flexibility on margin requirements. This proposal provides brokers with flexibility on margin requirements for institutions, quote, hedge funds, maintaining a position in risky plays, such as a short position in AMC. Regulators request collateral. The proposal ensures regulators have some sort of collateral from all the shorting that's been occurring. Regulators want to make sure that hedge funds have enough cash reserves to meet their minimum equity requirement. Now, guess what this sounds a lot like right here? When we come over here, Goldman Sachs, Bank of America, Citigroup, and Jefferies Financial Group. We've also seen a bank in Canada do this as well as Raymond James are among firms that have adjusted their risk controls at prime brokerage operations, according to people familiar with the moves. The banks are trying to protect themselves against fallout from extreme surges and dips that have characterized trading in companies including AMC, Microvision, and GameStop. What they are essentially doing is saying, hey, we are no longer allowing shorting in these equities because it's just too risky for us and honestly the people who are shorting AMC at the current time. This is unbelievable news for us, and all of these dominoes are starting to fall, and everything is starting to fall into place for this squeeze to happen in the near future. Now, some of you guys may have already read through and known about ICC 007 from the first time it came out and then when it got approved, but I don't think a lot of people are talking about the direct effects of this rule change and how it is actually coming to effect in the actual market. We are seeing all of these different institutions listed here and many more, such as that bank in Canada. I think it was the Bank of Montreal. If I'm mistaken, make sure you guys comment down below and correct me on that. And Raymond James. They're also not allowing the sale of naked options, meaning a naked call, which essentially means that you do not own the collateral of 100 shares in order to enter that position, and naked puts. But puts are a little bit less risky because you know the obligation. So everything is starting to fall into place. This is very good news for our situation, and we are continuously seeing these regulatory institutions in the clearing corporations such as the NSCC and the OCC and as well as the DTCC come out with these different updates to their margin requirements. This shows me that all of these clearing corporations know exactly what is going on, and they are trying to mitigate their own losses, but not necessarily the members of their actual clearing corporations. So when we come over here, this OCC document was addressed to clearing members on May 17th. This is a little bit outdated, but it does still play into effect. The OCC is the Options Clearing Corporation, and they needed an increase of about $588 million to their clearing fund. NSC 005, as we can see here, let me just scroll to where it actually says this. We can see as we scroll down a little bit further, right here, based on the back testing results discussed above and the impact to members of raising the minimum required fund deposit amount to $250,000 from the original $10,000, NSCC believes that raising it to $250,000 is the appropriate minimum required fund deposit that will minimize the financial impact to its members while maximizing risk management of activity that is guaranteed at the point of validation or comparison by the NSCC. Almost every single one of these rule changes is saying, hey, we know everybody is over leveraged. We know about this naked shorting going on and the potential for basically a global market fallout that is going to occur when this AMC short squeeze does end up kicking off. And again, we are not in the short squeeze yet. If anybody is telling you that shorts are covering, just point them over to this chart right here because we have seen a downtrend in the price over the past couple of days, and that is not what happens in a short squeeze. So something else that I want to bring up to you guys is this screenshot right here on Twitter. So this has been circulating around, And let's give a brief explanation of what this exactly is. So this is supposed to be the price of what AMC is trading at in the dark pools. Now, this is possible because of a two-book system. So in the dark pool, it's kind of an over-the-counter exchange, and they really are not going to report the actual prices that they're trading at to the New York Stock Exchange, which is not really going to affect our price. That being said, it's very unlikely at the current time that AMC is trading at $1,500 in the dark pool, although it is potentially possible. When we come over here, these are some of the dark pool prints that I was sent today. We saw a million share block in the dark pool costing about 44 million, and this came through at 44.11. A 100,000 share block at $45, a million share block at 45.02. So we are seeing that these dark pool prints are coming out around the prices that AMC was trading at. Now, if you guys are familiar with Twitter Spaces, we had a pretty long conversation about this today. I always hang out in those Twitter Spaces as well, and make sure you guys follow me on Twitter at ShortTheVix1. There was an individual in there that used to be a trader at a proprietary trading firm. What he ended up doing for us is he just called up somebody and said, hey, what are the prices at for this? And we came back and essentially said, hey, the dark pool prices that we are seeing right now are essentially the same exact thing that we are seeing on the exchanges. So nothing crazy is going on. Honestly, what this document is really meant to do is I think that when we get up to these prices, people might be more enticed to sell because that might be what they think the max value of what this squeeze is going to be. If you guys have done any research into this situation, you would know that the theoretical ceiling of this short squeeze is infinity. That's why they call it the infinity squeeze, because as we saw yesterday, AMC shareholders amount to about 4.1 million individual people, and you really only need to own about 120 to 125 shares each on average in order for us to own the entire amount of outstanding shares. So I would speculate that the average shares that each individual is holding is much higher than 125, but we will see some more results about this once we get that shareholder vote in. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.